piece with regard to the Indian macro, which came out last evening, was the India CPI inflation print, 3.21%. The consensus view was 3.1%, and honestly, even the ET Now poll indicated around a 3% kind of a CPI number, marginally higher. But when I'm going through or sifting through a lot of the brokerage notes since this morning, I think the larger concern, Sajid and Ayesha, seem to be that, given the spike in crude, what could the forward, which is what could the March number really look like, and whether there is a real need for a revision there, and could there be an upside or a downside bias, if one could call it, to that inflation print for the month of March? Really, that's the question that we're going to be asking. In fact, we also caught up with Yes Bank Chief Economist Indranil Pan on that CPI data, listening to a slice of what his view is.
For me, I think the bigger and the more crucial element is, even beyond the war, I think I'm slightly worried about the currency dynamics. Now, even as if the war ends, it will be quite a while before the imports and the export side that goes through the Straits of Hormuz normalizes. So that's something that we need to sort of be carefully assessing. And secondly, the capital flows, because of the crisis issue, I think the capital flows to the emerging market economies, including India, that has been on the lower side, will continue to be on the lower side. The impact of the West Asia crisis on the growth and the inflation and the overall macro perspective for India. Yes, even though the starting point for India in terms of growth and inflation is relatively healthy, if projections of FY27 GDP are just about 7% going down from a 7.7 to 7.8% in the current year, that will obviously have its implications in terms of the capital flows.